Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, January 16th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Yesterday, a holiday, so we did not have any economic data here in the United States. The markets were closed for the most part. We did have futures open, but there was nothing going on for the most part. Then here in the United States today, we did get Empire Manufacturing came in at 17.7, lower than the expected 18.5. Across the pond, we got a couple of good economic data points. We got the Great Britain CPI number came in at 3%. Now that's an important number because it is what the Bank of England is going to use to determine rates for the most part. That's their inflation gauge. And then we got, of course, CPI, which strips out food, energy, alcohol, tobacco, things like that are more volatile. Came in at 2.5%, expected to be 2.6%. And that's about it for the most part. Then on to the overall markets. We've got crude oil moving a little bit lower today. Did test that 65 handle earlier this morning, but we have since come off down, testing the trend line right now, basically. So this is going to be a real support area for the bulls. So they're going to look for all of this area here with the trend line, the Fibonacci level. That's an old Fibonacci level. Some might argue that it's not really valid, but it is still valid, to be quite honest. It is a past marker, and it will act as support for sure. Then on to gold futures. They're off a little bit as well today, by about $1 for the most part, but starting to look a little bit toppy here. We had this massive rally, some consolidation, another pop to the upside. I would expect this to want to come back down and test 1323 for the most part. Then on to Bitcoin. They're having trouble today, to say the least, down well over 2,000 points. Did go down and test that 11 handle. It very well could be eyeballing that 10,000 handle for a support resistance to go and test. It's the way it's looking to me anyway. Bonds, they are off a little bit today by about 4 ticks, unchanged for all intents and purposes. We did get this bottom. Looks like we've gotten some short covering going on. It is right here where the support resistance, the value area low, is lined up. So that is going to act as support and resistance right now. Did get a little overextended the downside, but I think that we're going to see a little bit of a dead cat bounce here and start to continue to roll over as the expectations of higher interest rates going forward is pretty much solidified at this point, I think. VIX moving higher by over a point up into the 11 handle. We haven't seen that in quite a while. And blasted above this 200-day moving average. Now, we were talking about this, that 200-day moving average was acting as a strong support resistance area, or at least as resistance, since we were below that. Today, almost unabated right through that line there. It will be a big determining factor if we can settle above there for sure, to determine whether or not we're going to see higher volatility going forward. And the reason why I think the VIX is really spiking, we got this gap higher, and the Dow Jones kind of looks like a shooting star. That is bearish. Anytime you get that blast off and you just have a bit of negative sentiment on it with a red doji for the most part, that is an indication as it being a little toppy, despite the fact that we're up 150 points. We need to talk about something like that. We're seeing this also in the NASDAQ. Now, the NASDAQ did create this all-time high intraday. It was right off the bat. As soon as the markets opened, we got that rally higher, made that print. So that is a solid number that people will look at. So it doesn't necessarily mean we have to revisit that, not anytime soon anyway, and that the way that the market is looking, we're a little overextended above the trend line here. I expect us to come down at least and test that trend line this week, and I would expect us to kind of break back down in there, going forward. So I think we're going to see a little bit of a pullback in the equities going forward. As long as these candles set up the way that they are and in the day the way that they are. That's the real point here. If we rally up and test the highs at the end of the day and close there, that isn't the same setup. So we need to make sure that the setup looks like this, or at least slightly red. And then tomorrow, obviously, we need a confirmation to the downside. We would not want to see the market go up and rally and break that high we saw today. So going forward, those are going to be the two lines that we're looking for, those 2 points. If it goes up, breaks above this line, that is not confirmed. It's going to look more bullish. If we go down, confirm, and settle below the low of today for the most part, if we go back down below that, that is confirmation, and that will look like we are rolling over. We can see this on the daily chart that this did happen intraday at 7:30. Basically, same thing happened at NASDAQ. And the Dow Jones rallied up, clipped off those new highs, intraday highs, and have since just taken out all of the longs whatsoever that got in overnight. So E-mini S&Ps coming off despite the fact that we are still in positive territory. All right, on to a few things that I've done. Costco, I added some long deltas to this. I went into the February and sold the 180 puts in there for 98 cents. So collected a nice credit. I think that I really battled back and forth with myself. I was looking at doing the 120, 180 strangle in there, and just decided to go with the puts in here. I think that Costco's been doing very well, especially now that they're really starting to do a push to do the self-checkout. I think that that's going to get those smaller purchases on the books right now. I think that people look at it like, hey, if I go to Costco, I need to buy a bunch of stuff so that I can justify standing in that long line for a half an hour. Now that you can go in there and literally buy 2 or 3 things and be in and out as fast as you can at a regular grocery store, I think that that's going to be huge for Costco. So going forward, I think Costco is bullish, and we'll see that show up. Now, the reason why I was able to get into this Costco is because they don't have earnings in February. We are right around the corner from earnings, and as a matter of fact, we have Goldman Sachs, the banks kicking off. We had Cisco today, not Cisco, Citi today, and Goldman Sachs, Bank of America, a few other banks coming out this week. So earnings season starting to really ramp up. We also have IBM coming down the pipe this week. So I do need to save some of my margin for some of those earnings trades for sure, but I decided to go into Costco and get a clean month with high volatility, and that's why I went into those February for Costco. All right, but other than that, I'm going to be really trying to keep my account freed up for a lot of these earnings trades. So stay tuned. Follow me on Twitter at Wolfman's blog to see what I'm going to be trading for earnings. That's going to be really important because I can't really necessarily talk about it in these market commentaries because I don't know exactly what I'm going to do. I usually do that at the end of the day. UPS, we got a bit of a confirmation here. Would like to see it settle there for sure. Remember, I still have on some short calls in there, and same with Gilead. Gilead looking like it's kind of topping out a little bit. Need a couple dollar move to the downside, but anything at this point will help after this blast off kind of caught my short calls by storm. And today starting to see a little bit of negative pressure. So hopefully we can get that for the next couple of days to the downside is what I'm looking for. I only have 3 more days with those, with the UPS and the Gilead. All right, so that's all I've got going on right now. Friday's webinar is going to be on the short put spread. So it's going to set up for something like Costco where we have a clean month. We have a bullish sentiment. I'm going to show you how to define that risk. The trade I did today is naked short put. That's not necessarily what we're going to be talking about. I'm going to talk about how to set up the short put spread for a high probability of success. So check that out at protraderstrategies.com. If you can't take that, take it easy.